It's funny when I think about it now. When I first got into trading, I was obsessed with taking every single trade that I could because I thought that the more trades you take, the more money you can make, which means you become profitable quicker, and I'll flip that $100 into $1,000,000. But in reality, 6 months into it, I'd lost 50 grand, unprofitable, and trying to take every single trade and trading more wasn't actually working. So I stopped trading on the 5 minute, I stopped trading on the 15 minute, and then I started trading on the daily chart. And the moment I started taking less trades is the moment I actually started to become profitable and make money. For me, the less decisions I have to make, the better. Instead of trying to make, 10 to 15 high pressure, decisions every single day, I only have to make 1 to 4 a month. And I have time to plan them out. I don't have to, make decisions on the spot. I've got time to pre-plan where my entries need to go, where my stop loss needs to go, and where my take profit needs to go. And instead of having to do it in the moment, I've got a few days to work it out. So for me personally, trading less actually made me more money. And I'm going to run through everything that I do, how I set my trades up, what I'm looking for. So then that way you can simplify your trading approach so that it's less mentally taxing for you, because trading is already hard enough, and the psychology is what trips you up every single time. So you need to implement things that can make it easier for you to enter and exit into positions. When it comes to trading support and resistance and simplifying your trading approach to make better trading decisions, starting on the daily time frame, the first thing that you need to do is align yourself with the overall market trend. So when you do jump on the daily time frame, you want to map out the swing highs and the swing lows of price, action, and market structure, because when you are trading, you want to align yourself with the trend. You don't want to be shorting in resistance in an uptrend and buying, support in a downtrend, because these levels are less likely to be respected when the overall trend is either up or then down. When you do first jump on the charts, these zones should be very, very easy to spot. If you're looking too hard and trying to find a zone, then it's probably not a zone. They should be very, very clear to you, and they should jump out automatically. Using the rectangle tool, not a line, we can map out the swing highs and the swing lows where price has had a major bounce. So looking here, we can see that price broke through, came back to retest, came, broke, and then came back again. What actually validates a break of structure and a break of a level is a strong bodied closed candle. So if you've got a candle that has a long wick, for example, so if you have a candle that has a long wick that comes down, but then the candle body closes below, that isn't a break of a level. That is a fake out, and that's why you may be getting caught out, because you think that price is going to break above, so you jump the gun and then get in before it's actually broken and closed with strength, and then it rips against you. So waiting for the confirmation that the level has broken before you enter, that is key to not getting, your stop losses being hit all the time. And if you are looking for a little bit more guidance and you are struggling with your support and resistance, or just trading in general and you're needing a little bit more help, I do have a free Discord that anybody can join. Every Sunday we do a live stream and we break down charts and we go through everything, and we have a look at trades for the upcoming week, if you are wanting to join, of course. Now, this is a little bit of an easier chart. So for me, let's have a look at Euro USD. So when you are looking at entering and exiting positions based on the higher time frame, when you are drawing your zones, you want to be looking at the swing structure. So this choppy price action that is just here, I wouldn't be drawing a zone off here, because price has chopped through it multiple times and it hasn't actually shown a clear reaction. So like I said, the zones should jump straight out at you. So it should take you a couple of seconds just to look at the zones and then draw them on the charts. Now, they're not going to be perfect, and they are arbitrary. So every single person's zones are completely different. No one's going to have the exact same zones as you. They're always going to be different. So what I mean by only taking a couple of trades a month, it's because the higher time frames only give you a few trades per month. So as you can see here, from July to December, we had 1, 2, 3, that would have been a fail, 4, 5 trading opportunities. So that's almost one a month. And then if you're looking at, 2 or 3 pairs, that adds up to being your 4. So the reason why I feel like you are getting stopped out a lot when you are on the lower time frames is because you have your swing structure, but then you also have your internal structure. And this is your swing structure here. And then all of this here is your internal structure within the broader trend. So when you are on the lower time frames, you might be looking at a section that is just here. But in reality, you think that the market might be going down and you're looking at shorting the market. But overall, it is just a small pullback within the greater trend. So if you find that your stop losses are getting hit all the time and you can't work it out, it's because you haven't aligned yourself with a higher time frame. And this is why I like it, because it's so much easier to read, it's so much easier to understand. And people will say, this seems a lot easier than what it is. It's because the concept of trading and what you have to do is simple, but the execution of doing it when the time comes is what's hard. So like here, you've got price that's ripping up. It's making, internally it's making the higher highs and the higher lows, but then you're in a range overall and your strategy says when you get to the top of the range, you have to short. And then that doubt creeps in and you think, what if this level doesn't hold? What if this breaks? What if? And then that's what gets in your way and stops you from entering into positions because you think something bad is going to happen. But in reality, the worst thing that can happen is that price will hit your stop loss and then you wait for price to then break through the trade, break through the level and then come back to retest and then you enter into a long position. You're only feeling stressed because you don't trust your system and you are either risking too much or you're over leveraging, or you don't fully understand market context and market structure, and you're basically just rolling the dice and gambling at this stage. So you just need to align yourself with the broader trend before you enter and exit into positions. So we'll have a look at another chart. So here we go. This is one I already drew up. Euro GBP. You can see here we've avoided this choppy range right here, this choppy here, this is too choppy, this is very, very choppy. When we've marked out the swing highs and the swing lows, you can see here that price was making high highs and then it moved into sort of a little bit of a range and then it broke above and now came back and now it's come back to test this as resistance. So price has broken this low and now it's come back to test this level of resistance. This is okay, you can short from here because price is broken down, you have the swing point, so then that way you can set your stop loss above and your take profit below. I've noticed as well, a lot of people are saying that they're wanting to get into swing trading, or they say that when they enter into a position, the market does something like this. So you'll enter in, the price will come down, and then it will just reverse and then hit your stop loss. When you are swing trading, you still need to take have realistic expectations on where your stop loss goes and also your take profit. Because if you're swing trading, you think I'm going to take the biggest move I possibly can, and you're setting, a take profit down here because price was there, 7 months ago. Realistically, what's the chances of price respecting this level or getting down to here? Like, you have a better chance of setting a realistic take profit. So somewhere that price can easily hit. So looking here, you can see here, price has returned here once, twice, and it's come through there multiple times. So even though you are swing trading and you are capturing a broader amount of the move, you still need to set a realistic take profit somewhere that price can actually hit. Otherwise, you'll find that price will come down and it'll just miss your take profit, or it won't even get halfway near your take profit, and then it will turn around and it will hit your stop loss. So you still need to be realistic. So this is sort of exactly why I'm looking at the daily time frame. So if we actually drop down to the 15-minute time frame and then we open it up, and this is where I used to get caught up, because I would be so caught up on thinking which level was the zone, because you can see here, is this the zone here, or is it this one up here, or is it this one down here, or is it here, or is it there? And I would be watching every single tick go up and down, and then when price would get to this zone here, for example, I would think, okay, is that the right zone, or is it going to be this zone that's the right zone, and then, or is it this zone I should short from, or is it this zone here, or is it, this zone here? And there would just be so many zones and so much going on that it was very, very hard to actually enter into a position that I should be taking, because there's just so much going on. So doing it this way cost me so much more money. And if you're someone who wants to trade on the 15 minute and the 5 minute, that's fine. I'm not saying that you shouldn't be trading this way and it's the bad way to trade. This is just from my own personal experience of trading less and making more money in that sense. Because yes, you might be trading something like this on the 15-minute chart, for example. So we'll go on the 15-minute chart and you're entering here in a long position, and your stop loss is down here, and then your take profit is just here, for example, for an example. And then if we switch to the daily, we can see how small that move actually is. You can't even see it on the daily time frame because it's just one little small move within that candle, where on the daily time frame, you are looking at entering from here, for example, and then targeting this much. So realistically, you're capturing a broader amount. So you might be chasing, 0.87 of a move, but then when you jump to the 15-minute chart, the trade that you're actually looking at taking is only a quarter of that. So realistically, I'm looking at taking a larger amount of a move where, scalping, you might be taking, 6 trades in the amount of, one of the trades that I'm looking at taking. The best thing that you can do for your trading is to accept losses, because the unprofitable trader is doing absolutely everything in their power to avoid losses at any cost, where the profitable trader has already accepted losses before they've actually entered into the market, and they've prepared for them with their risk management. They're not trying to avoid them and only win because it's unrealistic to think that you're going to win every single trade in the market. And then when you do have a loss, you take it personally, and then you think the market's out to get you. So trading less makes you make better decisions when it comes to trading. And for me, I just try to simplify everything. And it's not just about simplifying your strategy, it's also about simplifying the mental work that you have to go through to be able to enter and exit into positions. The easier you make anything you can about trading, the better you will trade, and the more profitable you can become, and the more money you will actually make. Because the more decisions you make, the more money you're going to give away, essentially. So see how you go with this, see if this works for you, but just simplify everything, every aspect of trading. Make it as simple and as easy for you to follow as you possibly can.